welcome back to my morning pot analysis videos with me, Richard Penn, market analyst at Hantec Markets on Monday, 30th of April. Let's have a look at cable, which is the big mover really in the market, forex majors of recent times, certainly in the last week and a half anyway. Sterling under serious pressure, continuing to the downside on Friday on that negative and weaker than expected GDP print for the UK, and again now further downside pressure on cable, not only with the dollar strength but also the resignation of Amber Rudd as UK Home Secretary puts pressure on the on sterling in the fact that tilts the shift back towards a slightly harder Brexit potentially in the cabinet, and the sterling is under pressure. 37.10 was that reaction low from March. Now it's interesting that euro dollar has already broken that key reaction low from March. Sterling is on the brink of breaking that low. So 37.10, if it breaks that, it completes a big top pattern. Gives you around about, the worst case scenario, around about 660 pips of further correction. And that would be over across about a 3-month period potentially of target range. But certainly that is a key low that the market will be looking out for. And there's a key low within this uptrend that has been sort of in place since. That was a spike low, so whether you can trust that as a low, certainly on the charts, I'm not sure, but you can certainly take it from March last year as an uptrend, and that uptrend is now creaking under the pressure, coming under serious test today, breaking to the downside, although not yet on a closing basis. Certainly looks like it's going to be on a closing basis if the market continues as it is, but you look at these momentum indicators, look at the MACD lines accelerating lower, the stochastics bearishly configured, and the RSI back at 30. Doesn't look great, does it? So any rallies pretty much are now a chance to sell, I think, on sterling. 140 big figure is a key level to the downside as a psychological level, but then that sort of old support has now become resistance. So that is a level that on a medium term basis grows in intensity. You've got 38.85 in as an old support turned new resistance, and also 37.80 as an old support turned new resistance. But 37.10 is that key level from March. That's coming under pressure, and certainly the momentum indicators on the daily and hourly chart pretty much confirm that. Now, as I did with euro dollar, I have to just amend this little downtrend that we've got on the hourly chart. But old support is new resistance, and any unwinding move, it's sort of failing in the 50s towards 60 area on the hourly RSI, failing around neutral on the MACD lines. It all looks pretty negative. So I wish you good luck in your trading today, and I will speak to you later. Thank you.